Good afternoon, everyone. Thank you for joining us today. Hello, Ivan.
Yeah, it's so passive and casual. Hi.
Hi.
Hi. Hi. We should probably check that people can hear us. If you
Yeah.
can hear us, can you please type in yes?
Yeah. Sound check. Yep. Thank you.
Yeah,
Thank
good.
you.
So we've done that.
We've done general advice warning.
Yeah.
Any advice contained in today's presentation is general only. Doesn't take into consideration your personal circumstances. You need to decide whether it's appropriate for you. Past returns are not an accurate indicator of future returns.
I'm moonlighting as a compliance person these days.
Yeah. Well, you are a responsible manager.
Thanks, mate.
Yeah.
I don't remember how much choice I had in that.
Or a manager.
A manager.
Yeah.
Just pretending to be.
Wow. It's all happening. Where do we start?
Where do we start?
I guess where we usually start. There's been, I don't know, XJO has climbed up a little bit.
Your computer skills are still pretty bad.
Yeah.
That's...
Yeah, I think
This
computer needs to get turned on and off. I think it's been sitting on for the last week.
Yeah, I think it's been longer than that.
Right.
Yeah. Can you imagine? So this is going to be interesting. So when it goes and clips through, I'm going to turn on the chart detail. But when it clips through that 5538 again, what would you get? 5553. So 5538, you just think it would just be another whole. Blah.
Yeah. Yeah.
Anyway.
Yeah.
But vol, look at vol.
Vol's kicking on.
50. This is like GFC levels.
Yeah.
People are crazy. This is crazy. We shouldn't even be sitting in the same room together.
Yeah.
Have you got to, had to like do a whole BCP plan, like had to report to ASIC and ASX and on the things that are going to happen. If someone gets sick in our building, and my building's bigger than yours, not that our office is bigger, but just there's a lot more people and it's just taller. If one person gets sick, they shut the whole thing off. No one can enter the building anymore.
Is that right?
That's it, yeah.
Yeah, we were doing our plan. We don't, because we're not a broker or a participant. We don't have to report back to the ASX and so forth. But we've been putting our own plan together this morning, and that we're trying to work out from a building perspective, because there's not that much published that explains what happens when, what triggers, whatever you call it, where you go into lockdown. Anyway. So
World Health Organization officially called it a pandemic last night.
Yep. Yeah.
So, I think that officially means that if we joke about it anymore, then someone's going to come and hammer us now. How dare you say this about Joe?
Yeah. So, serious stuff. And obviously that contagion is in the market. So, and this is just the volatility of the market at the moment. So a 20 points move in the short period of time that we've been talking is now no longer even just blinked at, right? But that's my volatility.
Where I remember the first sessions that we started running when you and I first started running these, it was like, wow, the market ticked up a point. Look at that excitement. It's been like a 30-point range all day. Wow.
Yeah.
But yeah, it's crazy. So it's, below 6,000, massive level. 5550, so 5500, 5550 were the levels that I used to trade at when I first started trading full-time in 2008 when I went full-time. But around 2007, when I first started trading futures, I think I might have it.
Yeah.
Yeah. It's like everyone, you walk on the street now and you cough and everybody turns at you and looks at you like you're about to get clobbered to death.
Well, we are both wearing gas masks while we're doing this presentation. So okay.
Anyway, and so it's amazing how much our market gravitates towards these levels.
Yeah.
When it sold off into 2018, same level. 5,500, there's something about it.
Yeah.
So
55.50 is that level. So anyway, we'll see. But I see that as well. So for me, that's the major level. If it breaks, I think.
Yeah. Well, I think
give up a lot.
I reckon at 5,500 level, roughly, or 55.50, whatever. I reckon that's going to be a point of mean reversion for a bit. I think we're going to have sell-offs. I think we're going to have rallies. But I think that in terms of trade strategies, I think I'm never going to go in and create a trade idea now off the cuff better than what I did on that Thursday over here. That's just not going to happen. Because that just doesn't happen ever or until now. But I think that now you got to start looking at iron condors.
Yeah.
My view. XJ iron condors, vol right here. You know,
well, you know, I would say that I'm not sure I agree, and that iron condors would be my go-to because volatility on stocks is so high that you can actually, you know, think about just doing a bull put spread or something like that, you know, and if you think it's mean reversionary, then I'd rather be in a bull put spread right now, a little bit out of the money on some things that have had a lot come out of it that, you know.
So I'm going to, I think, change your mind a little bit. So look, so we've got 55.80 now.
Yeah.
This is a 19th of March trade.
Yeah.
So 1 week, right? So next week. The break-even's 52.86, 58.64, right? That's 300 points in 1 week. Now, you'd think that if we fall another 500 points from here, that we'd have some kind of a bounce in the next week. Look at the max profit, max loss. Like, you just don't get, like almost 2-to-1 max profit, max loss. You know what I mean? Like, there is something very broken about the underlying fear in the market, and I think this is an awesome opportunity, honestly. And if you're worried about it a little bit,
you're 7 days in the trade, 2 days of that is a weekend, so 5 days trading. It's extraordinary, isn't it?
Have I just changed your opinion about doing an iron condor?
Yeah, actually, you might have. That's very interesting.
That's why I get paid the big bucks.
Yeah.
When I finally put my trades on, it's crazy. Like this is the kind of, you know, and obviously we've just fallen another 30.
Yeah.
But you know that's crazy. You know, so that's 52.87, 58.63. You know, that's a pretty, you know, 98.
And so you could widen that if you wanted to. So what if I wanted to take it 350 each way?
350 each way. What are we now? 55.80. One thing actually, I'm just going to double check just to be that guy. Well, actually, it doesn't matter. That is price of the futures. It's fine. So what are we saying? What is that? 350?
Yeah.
350. So max profit 350 because that's 52.87. That's like 300 points there.
Yeah.
So you're saying another sort of 50. So well, I mean, let's drop it to, you know, let's drop it to sort of 53.50, 50 maybe 800, something like that. And then let's tighten the stop. So if it really goes roaring back, let's do something like this, right? And so you'd be putting on a lot more. Let's say sort of 10 lots, $3,000 to $2,000, and you've got break-evens at 53.20, 58.30, but you're protected much more if it goes really, really badly.
Yeah.
You know, and so that your max profit, max loss is better. Now, if you want to go on and widen that a little bit and go, sorry, to say 5,200, 59.50, then you're going to get a slight drop in the max profit, max loss, but you've just widened that by another sort of 70.
Yeah,
I'd take the.
So that is a very interesting trade. So if you were happy to say that you thought there was a good chance the market was going to be between 5,300 and 58.50, let's say.
Yeah.
In the next 5 trading days. Do you want to go back to the path diagram? Just move a bit slower so that people can catch up. So can I drive? So
you can definitely drive.
I'll bring up the matrix. All right. So on from trading day perspective, if you wanted to do this trade, where are we up to? 58.65.
So look at tomorrow, if nothing changes, you'll make $500 on this trade.
Yeah.
Like, okay, we've got like $7,000 worth of risk, but that's 500, 700, 800, $1,000, and $4,500 on the close. That's assuming volatility doesn't even drop.
So if volatility was to, like, if it consolidated for a day, you'd get 10%.
Oh, hang on. You'd. Well, I mean, look, we're with 50. You'd think it'd go down to 40, which is 20%, right?
Yeah.
Right.
Yeah.
I mean, that's sort of what you're looking at. So just vol coming off a little bit.
Yeah.
You've done all right.
Yeah. Okay. You changed my mind. I actually prefer that to
single stock.
Yeah.
Well, it's
Because
just
I priced that up and you actually have to be closer. So, yeah,
what are you trying to do?
I'm trying to do that.
Yeah.
So for people that, like, go your own way.
But what I do is, for the sake of that 30 points and break even, I would seriously go in and tighten this up as much as possible. So you're effectively saying, it's a 58.25, 53.25 or something. So you've got that sort of 2-to-1.
Yeah.
And sure, you're losing 60 points. But I mean, if it's going to go out that far, it's going to go anyway, right? So
Yeah.
I think that, and so you're just better off. But then what will happen is, how much would you put on it? A couple of three grand, something like that?
Probably 5 on that.
5 on that? All right, well then, so you're sort of looking at,
There you go. All right.
there you go, 60 lots, 5,500, 9.5 grand return,
Okay.
as long as it stays between 53.34 and 58.16. Not that comfortable about it, go up a little bit, right? And then you'll probably cut down by 20.
And so if you're going to do that trade, me personally, if I was doing this trade, it would be set and forget. Like, I would not be trying to trade out of this. I would just be getting into it and just expecting that it will finish between this range. I wouldn't be fiddling around with it. That's just me, right? That's just how I would trade this, because you think about it. It could go outside of that range. What we're saying is we think the odds are more likely that even if it does go outside of that range, it will end up within that range.
Yeah. Look, so this is this is roughly what I'd be looking: 53.50, 5800, 5300, 5850. So 50 point stops ultimately built into it. I think, then we're talking a 53.20, 58.30. From where we're at 55.70, it's sure we're getting 150 point moves, but we're also at some point in time we are going to get a bounce in here as well.
Yeah.
There's a point in here. I mean, look at BHP's at 27.50. Do you know what I mean? Like, look at that as an example. CBA is at 67. That's lower than post Royal Commission low, right? Or if thereabouts. I mean, have a look at that. That's just these are good, solid businesses, right? There's nothing. So that's a 34% drop in 36 days.
Yep.
I mean, that's like, is BHP going to stop mining? Okay, they might go into lockdown because of, some pandemic and whatever. They might not produce product, but is it really going to be like a year of shutdown? I guess that's probably the thing. There's so much fear in the market. I mean, look, it's obviously everything's at super high. Like, you can just go on and say, okay, but if you're thinking about, so if you're a long-term investor, you don't care about trading, surely you're going to start thinking about putting money in. My dad rang me up this morning. He's got some, it's pretty much he's been in cash for a while in the self-managed super fund. He had one stock left, which was Hutchison, which he's gone in to sell today. Just actually out of interest, I'm just going to have a quick look at see where that's at. But his idea is, okay, I'm going to put some more money into my self-managed super fund, and I'm going to go in and 17 cents, and I'm going to go in and so he's made a killing out of that stock. Bought it when it was like 5 cents or something, and it's been holding for 4 or 5 years or whatever it was. And I like the story, which is why that we went to that stock. And it never really moved anywhere forever, so we stayed in it, and then takeover stuff with TPG happened about a year ago. Anyway, so he's like, oh, I want to dump this now because it has, like, that stock has stayed up. It's small cap, obviously doesn't get impacted by this kind of stuff, and it's actually defensive, so it's always going to outperform. And so he's like, okay, I'll get out of that and buy some BHP and some blue chips.
Yeah. And
you're seeing that on the early stage investment now, where you're competing with a bunch of people that typically wouldn't want to invest in blue chips, and now saying, well, actually, I'm interested in buying some big stocks. Yeah. Because a good solid business, they'll stay in business.
So what do we're going to look at Flight Centre bull put.
Yeah, that's an interesting one.
So and it is an interesting one.
I mean, you can I guess you can sort of understand why that's being hammered quite as much as it has.
Mm-hmm.
Obviously, you know San Francisco travel.
Yeah,
it's like $350 right now. You can fly to San Fran for $350. So obviously, Flight Centre is in a bit of trouble. But then again, is it really? Well, okay, they've got a 40-cent dividend coming out in 14 days. We'll see. We'll see what the value of that is. I'm guessing that's probably a
They're
little
going to
bit.
cut that.
I think it's probably kind of we need to think about what we're going to do. But $45 to $20 in a month, like, dude, this is crazy. You know, I mean, my business always uses Flight Centre just for the efficiency. I don't know how they take their fees. I still haven't figured it out.
I tell you what, though, the funny thing about that is we were playing around for a couple of minutes before we got on the session. When we did it, Flight Centre was at $20, $20.50 or something like that.
17% drop today.
Yeah,
that was. So you can't. So we can't actually.
You can't trade.
You can't go lower because it doesn't exist in the options chain.
Yeah.
So I think Flight Centre is pretty much dead.
That is ridiculous.
Right. Yeah. Interestingly enough, let's have a look at IV rank. So Coltex, interesting enough. But look at that, the lowest IV rank outside of something going through corporate actions is 74.
Yeah.
Right, so every vol is up. You pretty much right now, this is the cool thing about this market. Pick a stock that is typically going to go and say, what's a good solid business? ANZ, $19.30. Yeah, like this is insane. Look at that. It's 27 to $20 in a couple of weeks. Like what's the bank going, like, what, unless the virus kills everyone, which, yeah, it's possible, and then who cares? Look, this is awesome. This is like the type of trading that option traders yearn for. Yeah, this is the thing. I've been talking about iron condors in a public forum now for about 4 fucking years or something.
I'm gonna do that XJO one.
Yeah.
Do it now, or we do it later.
I reckon. Yeah, that's a good idea.
Yeah.
Let's chuck it in.
Where are you, XJ? Anyway, here we go. So XJ, I just wanted to look at it from here. So we're at 98 rank. I'll take that.
Bendigo Bank, 680. Look at that. I didn't even notice that. Santos, 455. That was trading at 680 after oil dropped. Like that's getting creamed.
Okay, so let's go Iron Condor. So 53. So let's say I want to go.
So while you're doing that, Paul asked, would you sell puts to buy your shares? It's actually, there's a lot of value in doing that right now. This is the kind of, market that you start thinking, okay, you'd actually look at, there's two things. If you've got shares and you're thinking about selling them and it's a big blue chip, covered calls are not a bad trade right now. If you fundamentally don't agree with the business, big volatility, big fatty premium, you can get some decent value out of that, especially in the short term.
Yeah.
And as if the market continues screaming, you just improve. Well, yeah, we're 55.25. We're through the low that while we were talking, that's what, 75 points.
Yeah.
That's this is what I'm used. This is what I like. This is what I wanted. It's back. This is awesome. But yes, so if you're really interested in buying some stock, let's say you think fundamentally BHP is a good business, 27. Selling a 27 put with the intention to buy the stock is a pretty good idea.
Yeah,
it's definitely a very good idea because you'll get some really fatty premium for doing that. The only downside is, if you're thinking about putting a 27 limit in, definitely do it with a put. But if you're not so comfortable about having a $27 BHP position and you want to see what happens, or you're really thinking this is a low here, which based on that price action, it's not the low. But this is the thing. If you would seriously consider, with volatility as high as it is, to do this.
What do you reckon about that?
You're totally. I've lost you. You're in the XJO trade mentally. Yeah. You're just. I think you're actually calculating your profits already in your head.
No, I'm just thinking about how much I can lose versus how much I can profit. So I think I'm pretty comfortable with that. Price matrix.
At some point in time, we really should. We've been talking about this forever. We really should open up a house account.
Yeah.
So that we don't have to sit there and like.
Yeah, we should just do that. But anyway, what do you reckon?
So you think, one second. So I'm going to use this calculator. So you're actually doing it now, yeah? Okay.
Yeah.
All right.
So that might be the news came out.
The US market didn't like
Trump
it.
said he's suspending all travel from Europe for 30 days.
Yeah, well, we're down to 55.10.
Might wait to see how that washes out.
I think that with vol going up, I think this is, I don't know, I'm going to do it as I get off. Yeah, you're logged into yours, so.
Just do it.
Yeah. Cool, 55.14, yes, sweet. 31, cool, next. We got a little thing, internet, next. We've got a few special screens. Okay, $4,000. Up to your account, you've withdrawn money.
Oh yeah, the wife was raided. Trading account again.
All right, you happy with it?
Yeah,
it's going in.
Yeah.
All right, let's do it. And I can just sit on it. I'm going to be really, really, really pissed if you get 31 and I don't. Just putting it out there. Alrighty, what do we got? I like look at this. This is the thing. This is what we were talking about with the advisor guys this morning. Look at that is a very wide spread on Nara and Condor. They just don't want to take this risk. We're gonna have to sit in there for a bit. We should actually, you know what we should do is, for anybody that does actually want to go on and do that Iron Condor, maybe we should get the market makers to price it up.
Yeah.
Just because it is doing what it is. But anyway, dropping a live trade on the webinar in this market respect. Thanks, mate. Well, let's hope that we get it done. That's all we care about right now. I'm actually going to go and chuck it on while we're talking.
Do you want to see if you go out and get Timmy to call a market maker for us?
Yeah, what have we got actually? 221.
Yeah. All right. So anyway, so let's move beyond that. But I mean, it is really a crazy period. So I think at this stage we're saying volatility is very high. All of this could go up. I'm not going to be doing 10 trades at the moment. And where I might be happy to sit, 10 or 15 or 20 grand at risk of my bank in the market at a point in time, then, and in this point in time, I'm definitely happy to trade. But, with the payoffs, I can put slightly less in and operate in a more volatile market. Paul, would you consider increasing the distance between the short and long strikes on one side that you didn't think the market was heading? So what Paul is asking is, would I put a skew on this? So let's go back to the strategy builder. In short, yeah, I would for sure, but I'm not in this point. I don't necessarily have a view, but you can definitely play around with moving the strikes around to say, well, I don't think it's going to go up, but I think I'm more bullish than I am bullish. Or you can play around and try and get a larger credit. Really, the best thing you can do is fiddle around with it. What I'd recommend is, because normally this isn't an issue, if you were trading something at such a short period of time, your payoff grid would usually have everything within the 1% ranges either side, but you might need to adjust your price increments up slightly, maybe if you want to go to 2%, and that will give you a better way of looking at it, or you might go 2.5. I'm going to go 1.3 increments, price increments, give you a better understanding of the range on the trade. All right. What can happen if volatility goes up or down? Play around with all of that, and if you get comfortable, then you've got your trade. All righty.
Iron Condor.
All right. Well, hey,
what were your strikes?
Oh, good question.
What do you got? You have 5 lots or something on there. I'm just doing it on my phone. Individual 60 lot. Jesus. Okay. 58.75, 57. Oh, so you widened it a bit. Okay. Such a God. 52.75. All right, 52.75. 19th March.
All right. While you're doing that, has anyone got any questions for us? I know the question before, and I was sort of in my own little world, was would you use would you be selling puts to bring on stock if you were building a portfolio at the moment with volatility where it is, and you were kind of saying, look, I would be happy to own something at a particular, like very happy to own a bank. I think as Ivan was referencing. Do you need to leave that up, Ivan? Then you can go and you can sell put options all day long at the moment with the volatility as high as it is. You know, what's the worst case scenario? Was you end up owning something you were happy to own at that price. You end up owning it at lower than that price because you received a credit for doing so. And there would be quite a bit of that action in the market at the moment, I would think. Right.
So you are next. I am in the queue after you.
Very good. Okay. I don't know what else to really talk about today. I think that the other strategy we were talking about and looking at, the strategy builder, would be bull puts. So maybe if you took something that you had a strong, has anyone got a strong view on something at the moment they think is
up right next to you there?
Yeah. Is there anyone that's got a view at the moment where they believe that you know, something's representing excellent value and they don't think it's going to go below a certain level, or they think there's a really strong level of support, they don't think it's going to go below? Pick a bank.
I think, honestly, making any kind of call like that is dangerous, broadly.
Yeah.
But then you look at that, for example, which is, you know, from 30 to 20 in a very short period of time, or from 37 to 19 over a period of half a year. I mean, I don't know how much I like NAV full stop, but
yeah. Look, probably what we're looking for, it's hard to really talk about these trades because we'd be looking for consolidation before we were going into them. So at the moment, volatility, I think we could trade a range. We expect something's going to be within a range as long as that range is quite wide. We could trade volatility, some consolidation occurring over the next 5 trading days. We could trade that view. You could trade a directional view, as in you believe that, you know, the key levels are going to break here as they have now. See, we're at 54.75, 78, so that's a break. You could trade that. You expect that to go further.
Yeah.
But yeah, I don't. Outside of that, I don't know.
I mean, this is the thing. You know, I think you've got 2 general broad questions here. One is that's properly getting thumped now. That just took another 30 points in a second. We're talking like this free fall. Yeah. But you do. I mean, at one point in time, you just say, okay, well, is it going to be is there going to be a dead cat bounce in this? I think you've got to start thinking that at some point in time, there's definitely a component there. I mean, this is the thing. We're trying to trade almost a no delta trade, and market makers right now are just like, well, we're on the same side. I don't want to. Yeah, that's what they're doing. So anyway, did you answer Rory's question, by the way? Why are we seeing so many iron corners in such highly volatile markets, likely to test one or the other side? Rory, the answer to that is, if it hasn't been answered, is it is actually a reason behind. The reason behind it is it's got the uncertainty and the volatility means that there is a lot less. There's a lot more premium in the trade, so you get a lot more. You get these situations like what we were looking at. Is starting to get a bit worried by the trade. I can hear you sighing. Maybe this $5,000 isn't going to come so easily. Or $7,000. The main reason behind that is that you get situations like the 7.5 to 5K max profit, max loss. That's why you're getting the iron condors. A lot of traders are just selling straddles, but that's when you don't sleep at night. That's the scary stuff. In our case, we trade iron condors because it's got its inherent stop loss. Yeah. It's probably the best strategy when it comes to volatility dropping off. It's not as crazy as a butterfly because you need something so specific. Although, again, if you're sort of at that level, these markets, you start thinking butterflies. But I think that from our point of view, we're 54, 44. We might want to change the strikes.
Yeah.
I'm almost thinking that we might want to.
I'll go back and have a think about that.
Well, you've just given me the cue, so that's good.
You're in front.
I'll see if I get filled. It's actually moving. The Theo's moving away because it's becoming asymmetric. But I'm more optimistic about a bounce back at these levels than a further onslaught down, honestly. So I'm happy to be in a kind of an asymmetric position.
Rory, the interesting thing, Rory's asked the question, is the strategy in the market to manage the trade or leave? So that trade that I just cancelled the order on, I just want to go away and have a think about the strikes now that we've had this extra 100 points have come out of the trade since we've been talking about it, or out of the market. That's a 5-day trade, that's a 5 trading day trade. So we normally, if we were doing this type of trading, and to price that up, we'd be pricing out like 40. If we were doing this like 4 weeks ago, it'd be a sort of a 40-day trade plus that, and the payoff wouldn't be the same, right? So
I think we got some impact on the market. Webby starts 56.03, 54.40. The market's going sideways forever. Minus 160 points.
Yeah. So I'd be leaving for that particular strategy. And generally, when we're doing iron condors, we're a lever of the trade. If you go and have a look at the research paper we put together on iron condors and some of the education we've done about it, we explain our approach to iron condors, and it's for us, it's about doing a range of trades. All right now. So spreading them across many trades, not looking at each individual trade going, I need this trade to be profitable. Okay, Rowan's asked, general question, all of us here are smart enough to know this is overblown market, overselling madness. Corona isn't that big a deal, and sure the big hedge funds across the world know this also. So why all this heavy selling across the board?
So I think that firstly, whether it's overblown or not overblown, I think the big thing is that people are, people aren't sure that it's overblown or not. So I think that there's a bit of uncertainty around that. But the impact to the economy is real. Hospitality in particular is in a tough spot. Travel industry is in a tough spot. As a result, there's ongoing companies like PR companies, for example, that immediately lose contracts because no one wants to run events. Think about the sporting and gaming industry, which is now suddenly people are going to go in and not have events. In Italy, they're running sports games are running. Sorry, can I just quickly still this? I'm just going to, I unlike you, I don't bail on stuff. I do want to get filled. Just make sure that was definitely mine, right? So anyway, but the impact is real. The impact is there, and I think that you've got and supply chain disruptions, toilet papers, tissues, whatever happens to be the case. I bought a new phone. I can't get my phone. I bought a new computer. I can't get my new computer. I'm just waiting for them to come through. And so part of that is incompetence on the side of Telstra, but another side is it's just, what's Telstra doing? Let's slam that stock. It's just there are real impacts. And so I think that the question is that it's not so much that it's COVID that's causing this. It's the fact that COVID is a catalyst for all of the other problems that we've had. And I think that, we were talking about this. I remember 6 months ago, I got slammed because I went on LinkedIn and I was talking for about 3 months straight about how we were all stuck in these passive investments. Everyone's starting to move into ETFs, and eventually, there's going to be an orderly exit out of these, and what happens in the case of a correction. And, the ETFs have contributed significantly to this because they have to rebalance quickly. So the users of the robots, etc., have to rebalance out of that, causing a much wider impact that we didn't anticipate. All those savings finally did add up to something, and yeah, it's serious. So anyway,
Mark has made the comment, I was told many years ago that it is possible for the price to go higher or lower than I could ever imagine. And the last 2 weeks have proven that.
yeah, the good old Keynes theory, right? It's,
Yeah.
the markets will stay irrational for longer than you can stay solvent. So, you know, I mean, we're through the 5% now, but you know, I'm gobsmacked that I'm still not getting filled. And your computer's properly went to a halt.
I think you probably have to trade in the afternoon.
Yeah, I think that's possible. And your computer needs a restart. I think that yeah, I think that's where it.
Market maker's gone home.
Yeah, well, I tried to get Tim, but he was out at lunch. I decided to grab some food. So
cool. Fair enough. Fair enough. All right. Well, guys, thank you very much. Anyone got anything else they want to ask about, please do. Otherwise, I'm going to go and have a look at my trade and ponder that some more. And good luck with your trading out there. I will note that quite a lot of people have made an extraordinary amount of money in this last little period with their trades. So there have been some really good trades that have gone on, and there have been some people that have taken some bearish positions.
How was my call that I was too busy to put on?
Yeah, but there are people. There's one.
You know, I tested it.
Yeah.
$5 trade would have given me 60.
Yeah, but there are people that have done that and held on to it because it's one thing to sort of set a trade. It's another thing to be there as it can and really ride it in. And there are some people that have done that brilliantly well. So it's really good to see. Yeah. There's a lot going on out there. So good luck with your trading. We're here if you need us, and we'll speak to you next week. Have a wonderful day. Cheers.
Thank you.